The global economy is on the verge of collapse. The bond markets are shaking. The dollar has plunged. And the US Treasury is doubling its liquidity support. Translation, the US government is now buying back its own long bonds in massive size because someone has to. What does all this mean? Well, according to one analyst, the yen carry trade coming apart is the beginnings of a Godzilla margin call. And right alongside it, on the geopolitical side, because what happens in the world is reflected in markets, is a guy who nailed the 2008 financial crisis. He says the cascading effects of the Iran war and the Strait of Hormuz are taking us into the Trump depression. Both analysts agree we're looking at 1929 or worse. And amidst the chaos, Bitcoin has stayed resilient. It even started to move when the bond markets were rattling. And that is telling us something. Hold on, are they planning to retire US Treasuries and take them out of circulation? And if so, what does all of it mean for Bitcoin? Because gold has been dominating. Stay with us until the finish. You're gonna learn why the biggest winner from all this, the fastest horse in the race, will be Bitcoin. The Trump depression, the Godzilla margin call, the dollar's demise, and $1 million Bitcoin are all on the agenda. That's right, strap the hell in. Send it! Now, before we get to the bond markets rattling and the Godzilla margin call, we have to start with what's actually bringing the whole house of fiat cards down. And if you're new, don't forget to smash the like, hit subscribe. It helps us get the word out, and that way you get the best in Bitcoin news delivered to you daily for free. It's a win-win. Now, to tell our story, we go to Professor Steve Keen. This is the economist who saw the 2008 financial crisis coming years in advance. Not guessed, modeled it. He's the private debt guy. While every bald talking head on CNBC was popping champagne and calling subprime contained, alleged quote, by the way, Keen was starting at one number, private debt to GDP, and that number was screaming. Here's the thing, right? Mainstream economics doesn't even put banks and debt in their models. That's like trying to fly a plane while pretending gravity doesn't exist. Keen built his whole career on the idea that debt is the entire ball game, and when private debt tops out, when people stop borrowing, the credit engine stalls and the whole thing rolls downhill. That was the 2008 playbook. And now he says we're doing it again. Bigger, except this time it's got a name, the Trump depression. And before you yell at me, this isn't partisan. I don't care whose name is on it. His point is that the credit swing is so violent and the private debt so bloated that what's coming is a depression scale event, not a recession, a depression, 1929 or worse.
We're in really, really dangerous waters. And what scares me the most is we'll see global famines occurring, and where famine occurs, if it's widespread enough, you also get social breakdown. So we're in a very, very dangerous point for the global economy. Now, with the obsession that conventional economists and politicians have with efficiency, means we've gone across to a production system in the West which relies upon supplies arriving just in time for the manufacturing process that they're part of. The same with fertilizer. Fertilizer arrives just in time for when it needs to be used to enhance the growing season. But just in time has been smashed by a month. There's a month missing in the flow of goods and services. We've also got a decline in productivity as well from the collateral damage to production facilities as a consequence of the war. We don't have time and we don't have resources, and that's going to really hit us very badly this year. The total supply of fertilizer for the world is going to drop by about 20% courtesy of this crisis. Now, whether that affects countries depends upon their own stocks of fertilizer. So obviously China is quite safe. So if we then had people saying, well, China is going to send fertilizer to India to give India the capacity to produce food, and to Australia and to Britain and so on, then we could sail through the crisis. But that means we're going to rely upon cooperation from politicians. And of course what we've seen is anything but cooperation being the rule. People hang on to things for themselves. So this is probably going to lead into increasing the breakdown we're seeing in global trade coming out of this, because people don't trust each other. Countries aren't willing to sacrifice their potential survival for the survival of another country. So we're going to see serious deaths coming out of this absence of fertiliser in particular, and it's going to happen this year, and it's going to be a patchwork of where it happens all over the world. But countries with low existing stocks of fertiliser and countries which don't produce their own fertiliser, they're the ones who are going to be most vulnerable, and that includes some of the wealthiest countries on the planet. It's the UK and Australia that I think are going to have the hardest time out of that, and you'd never even imagine the thought of a famine in the UK, but given this disruption to production and the fact that Britain relies upon imports for more than 40% of its food, it's extremely vulnerable, and there could be even a famine in Britain.
Okay, so if the house is on fire over here, why are the bond markets shaking over there? Because this geopolitical tragedy and the teetering bond market are not a coincidence. They're actually the same machine. Here's what nobody explains in a way a human can actually understand. The yen carry trade. For years, Japan has had interest rates at basically zero. Free money, like they'd practically pay you to borrow. So, the smartest money on earth did the obvious thing. Borrow yen for nothing, convert those yen into dollars, and buy US stocks, US bonds, anything with a yield. It became the single most crowded trade on the planet. We're talking trillions. Some estimate near $4 trillion. The problem? The moment the yen starts to strengthen, and it's been ripping, everyone who borrowed yen suddenly owes more in dollar terms. Their collateral is getting smoked. So what do? They sell. They sell US bonds. They sell US stocks. They sell everything to pay back the yen. A forced unwind. A margin call. But this isn't a normal margin call. This is the Godzilla margin call, because it's not one trader getting a phone call. It's an entire ocean of leveraged money coming out of the water to stomp on the bond market. And when the world's reserve asset, the US long bond, is getting sold into, the dollar goes down with it, which is exactly why the Treasury is about to do the thing we're talking about. Somebody's got to catch the falling knife, and spoiler, the only buyer left standing is the guy who printed the money in the first place. Now, with all this happening, bond markets rattling, the yen carry trade unwinding, the dollar plunging, and knowing who Scott Bessent is, it begs the question, is this by design? Let me reintroduce you to the most valuable man in our government. He's got a pink house. I'm not making this up. The Treasury Secretary lives in a literal pink mansion. And he walks around looking for faces to slap. The man is an enigma. And for that, we salute him. Here's the wild part. Bessent is talking about revaluing the gold. That's Treasury speak for this. The US government has been carrying its gold on the books at roughly $42 an ounce since like the 70s, a number so fake it's basically just a running gag. And if you just remark it to the actual market price, boom, instant hundreds of billions of dollars of equity on the balance sheet. No printing required, allegedly. And that same revaluation move can be the very means to accumulate for the strategic Bitcoin reserve, exactly like Congressman Begich laid out. So connect the dots with me. The bond market's cracking, the old system's wheezing, and the guy running the Treasury is quietly marking gold to market and stacking a Bitcoin reserve. Coincidence? Or is the exit being built in plain sight?
So the private debt is the dangerous one, because you can't repay a private bank with money you print. Okay?
I've tried, but this doesn't work.
It doesn't work. Oh. They check the notes too carefully, bastards. Whereas with the government doing it, yes, if the government wanted to eliminate all its worries with private government debt, the central bank could buy the lot tomorrow. This is the thing. Your wife can't buy your private debt and get you out of having to service it. But if a central bank buys all the outstanding bonds, and all it's got to do is say $40 trillion worth of bonds. Okay, we're going to put $40 trillion in your reserve accounts, and you're going to transfer the bonds to us. We're going to put $40 trillion as the assets we've got. Problem solved. And then because the central bank is actually owned by the Treasury, one of two things happens. Either the Treasury stops paying interest on those bonds, or the central bank gets the interest and then remits it back to the Treasury. But so if you're worried about government debt, let the central bank buy it a lot.
It's a bit like what Japan has been doing for decades, of course.
Yeah, 250% of GDP. It's got other issues, a demographic decline and so on, but government debts is not a problem, and they've shown it by getting to 2.5 times GDP. America's freaking out about 1. It was about 40% of GDP when the financial crisis hit, as they ignored private debt, which was 170% of GDP. So all this stuff, think clearly about it. If somebody you own, the Treasury owns the central bank, could buy all your debt tomorrow, and therefore you owe your debt to somebody. Your debt is owned by somebody you own.
Yeah,
have you got a problem?
No.
Now, well, Steve Keen, friend of the program, has great insights into the macro arena. He's kind of riding the short bus when it comes to Bitcoin, and that's okay. We can still learn from him in his area of expertise, and maybe we'll teach the old dog some new tricks today. So, where is Bitcoin headed? Will Bitcoin always be just second best to gold? Or does the Godzilla margin call mean it's time for Godzilla to step onto the playground? We're about to bring it home, but before we do, look at our likes!
I gotta pump those numbers up. Those are rookie numbers in this racket.
A lot of people who are serious about Bitcoin skip the most important part. Not NGU, holding your own keys, being your own bank. If the last few weeks taught you anything, it's that you need to be prepared. Multi-sig, running your own node, verifying your own chain instead of trusting someone else's. Bitcoin Way walks you through every step until you've actually got it, not just installed it. They also cover privacy phones and Plan B residency if you're thinking bigger picture. Schedule a free consultation, scan the QR, or hit the link below. Do it today. I've always been a skeptical guy on the Bitcoin-backed loans. Too many of these platforms turned into rug pulls wearing yield costumes. Ledn isn't that. 8 years, 10 billion in loans, 0 customer Bitcoin lost, 0 rehypothecated. They don't lend out your collateral, period. Auto top-up protection so you're never getting liquidated. Lowest rates in the market, no fine print. Keep your stack, get the cash, repay whenever. 0 penalties. I personally have 2 friends who have used the product to put down payments on their first homes. The smartest minds don't sell their assets. They borrow against them. Head over to learn.ledn.io/simply today.
It's got a long way to run, even if it becomes just half of gold, which I think I don't see as reasonable. I think it's a better money than gold objectively. But even if it becomes half of gold, that's still another 10x from here. There's still enough appreciation for it to go up 10%. So even if your case for thinking about Bitcoin is that it's half as good as gold and it's going to become half the money that gold is, that's still a 10x from here. It's not easy to imagine a 10x with gold. We need to kill inflation. We need to kill the ability of governments to finance themselves by robbing productive people. This is the fight. This is what it's about. And for that, we don't need everybody in the world to run their own node and hold their own keys and buy their coffee on chain. We need to make the Bitcoin blockchain much more decentralized than gold so that we don't end up in a situation where every single country has one central bank that controls all of the clearance of payments between that country and the rest of the world. That was the natural, feasible solution to the problem of scaling gold with 19th century technology. You couldn't just have a person in France ship 3 gold coins to their supplier in the US every time he wanted to trade with them. You had all of the French people settle with their local central bank, and then the central bank of France settles with the US at the end of the day or week or month or year or whatever. And so this was just the natural solution for gold to scale. And it meant essentially very expensive and very small number of international settlement transactions where for each settlement, thousands of smaller transactions were taking place. So when at the end of the month or year, the French central bank sends gold to the US central bank, it's settling thousands, maybe millions of transactions that have taken place over a year. Well, Bitcoin allows us to do far better than that. We can still do 500,000 or 1 million transactions a day, which is an enormous thing. And then, there are ways of making it a little bit more efficient. So you get millions, essentially, of final settlement transactions every day. And that, on its own, I believe, is strong enough to allow us to have the entire world use Bitcoin. We can have hundreds of thousands of full nodes that perform final settlement with one another every day or every week. And it would be far more decentralized than the central banks that have to lug physical pieces of gold around. So that really is the value proposition. For me, it's not that everybody's going to have to buy everything on chain. It's that the chain is quick and large enough that it can have a far larger number of financial transactions carried out internationally for final settlement than the fiat and gold monetary system, which is why the subtitle of my book is The Decentralized Alternative to Central Banking. That's what the Bitcoin standard really is. It's a decentralized alternative to a system in which we have 200 central banks around the world, but really ultimately, we only really have one central bank, which is the US central bank, and everything else is essentially a second layer solution. So gold and fiat have to centralize into one central bank at the end of the day. Bitcoin, I believe, will centralize to a system of tens of thousands, maybe hundreds of thousands of central banks. And none of these central banks will have the ability to stop you from using other central banks, and none of them will have the ability to print money. And that's it. That's the jackpot. If we're just able to stop central banks from increasing the money supply, then we are going to make the world an infinitely better place.
Hey, what do you guys think of what Saif had to say? Let us know down below. Now let's get to the bullish crescendo. You've seen models. Stock to flow, plan B, power law, blah-de-blah-de-blah. They're all lacking. Why? Because you know what happens when Godzilla steps onto the playground. So, considering all the models are destroyed, we need a new model. And due to the complete lack of bullishness from the other subordinate limp dick models out there, this show is officially adopting the Omega 60 model. That's right, Samson Mow is our quant. You notice anything different about him? Here's Omega 60 in 60 seconds. Most models use compound annual growth rate, which is a fancy way of saying pick two endpoints and hope. Bitcoin's so cyclical that your answer depends entirely on whether you start at the top or the bottom. Omega 60 does something smarter. It uses the median annual growth rate, the MAGR. Take Bitcoin's yearly returns, line them up, pick the one in the middle over the last decade plus. That middle number is about 60%. So, Omega 60 just compounds Bitcoin at 60% a year, a number that's actually conservative against the full record. By the way, and draws the line. The line doesn't care about your feelings. And it says $1 million Bitcoin by 2031. And that's being humble. But here's the part that made me sit up. And it ties straight back to what Saifedean just said about Bitcoin becoming half of gold. Omega 60 has something called the Terminus line. That's the price where Bitcoin's market cap equals half of gold. Right now, that line sits at roughly $785,000 a coin. Saifedean says half of gold is a 10x. Omega 60 says that's the floor, not the ceiling. Same math from two different prophets. Now, since Bitcoin woke up and chose violence this morning, let's hear Samson say the quiet part out loud.
We're getting to the point where we should be going parabolic very soon.
Is there a particular reason or catalyst that will set it parabolic?
Well, there's a number of reasons. Like, first of all, you can look at the macroeconomic landscape and the massive accumulation of debt in the U.S. Interest payments are getting to $1 trillion a year. And I don't think most people realize, but these are astronomical numbers, and these are absolutely unsustainable. So either there's going to be a debt jubilee, or the US dollar has to rebase to Bitcoin. So, one Satoshi, there's 100 million Satoshis in a Bitcoin, and you could reprice the US dollar to one Satoshi equals $1.
why would the US dollar have to reprice to Bitcoin?
Well, I mean, there's no way to pay the debt off, right? And debt is far higher than GDP.
Yeah.
So something has to give. Either there's a debt jubilee all around, or you have to reprice or rebase to a harder asset. And it's difficult at this time to imagine the creation of a new dollar. Like you have that in many countries, when the fiat currency fails, you just make a new one and you lop off some zeros. But with the advent of Bitcoin, it's no longer possible because people they have an option now. They have a choice to go to Bitcoin or to accept a new fiat. And I just don't believe that will be the case. Therefore, it is inevitable that we do rebase to Bitcoin eventually. The question is when. But I believe $1 to 1 Satoshi is a fair rebase plan.
All right, let's bring it home. Here's what just happened. In order, the yen carry trade, trillions of borrowed yen, unwinding. The issuer becoming the buyer, which is the quietest admission you'll ever hear that the Ponzi running since 1971 has no other bid. Steve Keen, the guy who called 2008, says the private debt unwind takes us into the Trump depression. 1929 or worse, and in the middle of all of it, Bitcoin didn't break. It started to move. While gold's been dominating, Bitcoin's been patient. And now, the math. Saifedean's 10x to half of gold, Omega 60's Terminus line. Both point to the same destination, 7-figure Bitcoin. This isn't a crash. This is a transfer. The biggest winner from all of it, the fastest horse in the race, is not gold, not treasuries, not the dollar. It's Bitcoin. That's why you're here. And that's why you stay humble and stack sats. Okay, real talk for a second. Not your keys, not your coins. I've said it. You've said it. We've all said it 1,000 times. But nobody really talks about the part after that. Once you got the keys, how do you not mess it up? Because I've seen people lose a seed phrase or get it replicated, forget where they hid it, spill copy on it, all of it. One dumb mistake and your whole stack's gone. That's the actual reason I like BitKey. Instead of one seed phrase holding everything together, it splits things 3 ways. By default, your phone, the BitKey hardware, and a key held by block. You only need 2 of 3 to move anything. So if you lose one, you're not locked out. And block can't touch your Bitcoin on their own either. Nobody's holding the keys to the kingdom but you. And here's the part I think is kind of underrated. The hardware itself shows you what you're signing. So even if your phone or laptop somehow got compromised, you're not blindly trusting some address. You're confirming the real one on hardware no one else can reach. No seed phrase to babysit, real recovery if you lose a device, a real plan for what happens to your stack down the road. That's not theory, that's how self-custody should have worked from the start. Download BitKey today, use my code SENDIT for 10% off, and this episode has been brought to you by BitKey. Hey, hope you guys enjoyed this one. Don't forget to smash the like, hit subscribe, give us a pamp, share the Sound Money Gospel, and let us know down below. Do you buy Saif's 10X? What about the Terminus line? Is the Godzilla margin call real? We want to know what you think. Hey, love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.